Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it is Monday, the first day of a very short week, and now we are on day 4 of a rally that started last Wednesday. If you remember last Wednesday, we're heading into the Fed. The world was wondering whether or not Santa Claus would come in on his sleigh and swoosh in and spread some holiday love, and most people started to doubt it. And that seems to be when you have to start looking for signals. It seems like the consensus has been wrong for the majority of the year, and every time something looks kind of severe, it seems to go the other way. So with all that said, last Wednesday, the market ignited. I think a lot of guys in the VTF took advantage of it, considering that we were trying to be long into that end of the day to start the move, and we've stayed with some names and we've traded others, and now, lo and behold, look where we are. The S&P wound up giving you a V bottom off of the 150-day, okay? And, just like we had a V bottom here, that really never looked back and went above the 8-day for the majority of this move before we did get that small, corrective phase. You had a somewhat of a close in the highs, gap and go, took back the 8 and 21-day right here. Okay, so even if you weren't really, into the rally and you said, I'm going to wait, because Scott says when we're below the 8 and 28, below the 8 and 21-day, we're out, so I'm going to wait for it to be reclaimed, or I'm going to wait till he's covered my shorts till then. You've saved yourself another, 30 handles or so. So P.S., a lot of us were hoping for some digestion into the old highs here. And at this point, doesn't seem like it's waiting around. So if you're rolling up your shorts because you listen to the Perma Bears on Twitter, you know what? Just make sure you have a plan and you could actually sustain a move, through the prior highs, because once it gets through those highs, everything is a guess. And this was pretty fierce and pretty powerful. And usually, like we said, you had 2 days of power engulfing 6 or 7. You rarely want to really get in the way of that. Okay, same way here, you had your V bottom, a little sideways action, and then really never looked back, even though everyone said, oh, we can't rally anymore. This is, going to go back and test the lows, blah, blah, blah. Meanwhile, here's your low, here's your higher low. Now we're right back at the highs. So anyway, you go to the Qs. Qs, participating, not leading, but it's just fine. Talked about if we could hold this gap, that's what you trade against into year end. This also reclaimed the 100-day, didn't even get to the 150-day, and now somewhat trying to clear this more macro wedge. Okay, it's above all the moving averages. You had your quick break here, okay, and if you sell when the 8 and 21-day breaks, you have the opportunity and the free mind to figure out if you could buy a dip. And this was about a 3% dip or so. So if you, again, didn't sit and hold your nose and go underwater and just close your eyes, chances are you could have sold there when the trend changed, or even sold here and then looked for a signal, which we did get on Wednesday when we closed on the dead highs, and then you had your gap and go Thursday. Now here we are into this trend line, so we'll see what goes on next. The Russell also, I've been talking about it for the last week, thinking, actually 2 weeks ago, saying the weekly chart shaping up. Let's see what winds up working itself through, and you had that small overthrow to the downside, and then it trapped a lot of shorts, and now we're right back at highs. So these overthrow moves are pretty common now. So you have to be careful. Like a lot of people said here, all right, we broke below this 114, area. So we could have fallen apart. It could have been a move to the downside, but no, what happened here? It came right back in, reclaimed this area. This was your spot to either flip gears and cover your shorts if you were short and get out of the way, or even look to get long for then the potential of that fake out move to give you a breakout, which is what wound up happening. Okay, now you have this gap. It's slowly moving higher. You look at the weekly chart. Okay, this weekly chart I showed you this morning, or I think I even showed you last week. Very, very interesting. Okay, most people are ranting about the underperformance in the Russell, which it's true. It did underperform this year, but we don't just trade one indice, but you had a massive move in 2013. Then you had a channel to consolidate what has been a massive move. So now if this were to get a real breakout, which it feels like it's in the process of, okay, you have just say 108 to 120, that's 12 points. That 12 points gives you, hold on one second, a move north or near 130. So here is, your move, your consolidation, and perhaps it goes again. What did it do? It held higher. You actually have a red dog reversal outside week in the IWM. So just keep that in mind if you're just listening to the bears out there and shorted here and kept shorting here and think that you're going to get saved. I don't know if it just cleanly breaks out before the new year, but when new money comes to work and if it's above this area, shorts are going to get squeezed. As far as stocks, today wasn't the easiest day. Day 4 is never that easy because you don't know what's going to continue, what's going to digest, what could play catch up. So in high beta land, you had 3 potential stocks that could play catch up. Okay, you had Google, Netflix, and Amazon. All 3 of them kind of broken names, and I came in thinking which one could we play for a little bit more room into resistance. So Google I didn't touch, but if you look at the daily chart, this also someone had an overthrow move, okay, below the prior pivot, and when it took that back, that could have been your spot to cover if you didn't cover into the weakness. Uh-oh, my mouse is starting to have problems again. And then today, anyone who shorted a little bit early saying it's a weak stock, I'm just going to short it back at, prior support turns into resistance, you probably got squeezed. And now, who knows where, maybe it tries to go to this. So that's why you write, resistance 1, resistance 2, and you try and let the market tell you where it's going to go. Okay, and you still have the 200-day all the way up there. So just don't blindly do anything. But if you chose this one long, you did okay. If you chose Amazon long today too, it started off only up $1 in a broken name. There's a difference between a trend and a trade. Today you had a trade. Now the question is, can it continue above this little area because all of these moving averages are going to be a lot of resistance. So perhaps, if we open up tomorrow, I'm not sure how we're going to open, you get a little bit more room, and then this is your next spot. So a trade. Again, difference between a trend and a trade. This is just a trade until it shows you something more. On the other side, if those shorted the quick pop in Netflix, you did better. So it just shows you that it's kind of hard to, you have to pick the right one. This one I actually made money on to the long side when it broke and when it was red and then when it went green. And then some guys made some money when it went back below. But this is still sort of flagging. Still above, this broke below the prior pivot, came back up, trying to show some commitment to it. So I'd be neutral here. Be very, very selective. Use your 3 and 5 minute charts because if they wanted to come after this too, maybe there's a trade higher. But again, it's a broken stock, so you just don't buy every dip if it starts falling apart because who knows, if the trend wants to continue to the downside. And that's what they do in thin tapes or holiday short weeks. They can push things around so you narrow down your time frame and you bring your size down. Because if you just chose to be long Netflix for that oversold bounce into bigger resistance, and you didn't trade Google or didn't trade Amazon, you're probably like, what's the matter with me? I picked the wrong one, blah, blah, blah. But maybe if you chose a little bit of each of them, then it might have been a little bit more fruitful for you. Another broken stock that had a bit of a move was Tesla. This one too, gave you your outside day if you wanted to cover a little bit of your shorts, and then it gapped above this prior descending channel, and it's working its way higher. It's right at the 200-day. I don't think it's a compelling long, but also it might not be ready for a short. It could pop above this 200-day, then all of a sudden you're getting squeezed into this 232. This was your breakdown point here, at 240. So there is some more room. It's not, again, this I think is a trade, not a new trend, and it's just coming back up almost to retest this broken neckline, or broken area from this big macro chart. So there's still some room to go. So just know what you can handle, know what your size is. Look what Priceline did today. Squeezed the bejesus out of people. If you trade a thin, crazy, expensive stock like this or capital intensive, this actually just reclaimed the 8 and 21 day, and now I guess you'll see what happens here. This reverse, look at this small red dog reversal here, gap up, little follow through, 4-day tactical trade. Hopefully you covered some shorts if you were short. Some guys were short since breaking right around here. So at this point, it's still broken. It's still not in a strong trend. It still has a lot to prove, but you know what? It came all the way from here, and now it's coming back up. So you could trade these ends of the ranges. Today, I don't think I've touched G Pro in multiple weeks because it's been a piece of you-know-what. So today, showed some relative strength, did a quick trade. And, I know you have the lockup tomorrow, but it seems as if, everyone wants to be short into it and they might not have the easiest way to cover. So, it did hold this little area. It's a broken stock. Maybe there's a trade. I did get a little long near the close as well. Maybe you get another day here. This was an outside day, somewhat. and everyone just thinks that you could cover below 50. Maybe, usually when everyone, is thinking a certain way, it changes a little bit. And I don't think I've really touched this one since this day, okay? And now it's worth a little bit of a try, little counter trend move, nothing great. Same thing with Mobileye. Mobileye is a little interesting. It's been out of play. You had a quick, good move, when it first came public, and since then it's been consolidating. But you do have a descending type of trend line here, okay? It's starting to curl into it, so maybe this is something to focus on. I haven't looked at it in a while, but perhaps it gets better. Okay, it has a lot to prove. Every time it's gotten here, it's failed, or it's pushed through and then failed, like this one here or here or here. So maybe from a lower level, it's could be something to get on the radar. Okay, this also, it's not just for electric vehicles, it's for every vehicle. A lot of the high-end vehicles have the software in there, so if you get in your car, it shakes you a little bit, or if you're parking and you go near it, so it's like one of those software packages that's for the future, where at some point you think the software is going to drive your car. But again, new technology, new issue. If you look back at the chart, I tend to like these when they're above the 8 and 21 day in a strong trend, and it hasn't been in that one in a while. Like here, remember this? This was strong until it broke its trend right here, and then it turned into a trade versus trend. Then it tried to do it again here, broke right there, trade versus trend, and it's been slowly coming in. So maybe there's something interesting. This definitely is something interesting to keep on the radar for more gains into next year. The banks are still hanging around. Goldman showed a tiny bit of relative strength. You had that overthrow move, and I never played it again. I think I sold into that and was all happy that I missed this, but it came right back up. But anyway, above the 8 and 21 day again, perhaps you watch this another day or so it can go. I have been in Bank of America since Thursday. Looks pretty good. I guess at some point perhaps it tries to take out the highs. I don't know if it does it this week or next week, but overall above the 8 and 21 day, the weekly chart in my opinion looks much better. You have a small cup and handle, and if we were to take out 18, I do think at some point 20, 21 maybe next year, we shall see. Morgan Stanley's been best in breed. You go to the daily chart. Good job by the chat. Everyone tried to get me in it today because this is the strongest stock, and it broke out. I thought maybe it would wait a little bit, but it held the prior breakout. Now it looks like it's going again. This has been one of the leaders this year, acting better and actually leading over Goldman. So hopefully it's still there. We've been trading this during this rally. I went with Morgan Stanley. Unfortunately, I missed it this time. It happens. Oil was weak all day, and the market decoupled from it. We'll see what happens when it breaks the new threshold here. Every time oil breaks a new threshold, the market gets a little scared. Okay, today the market wasn't scared, but we'll see what happens if Brent or crude breaks below 54, or if the USOs break below 2050 and continue down. The XLEs are acting a little bit better. A lot of people were just shorting it blindly today, saying, how come they're not going down? Well, I don't know. At this point, you had your little reversal, you had your easy move, and now it's trying to figure out whether it could hold higher and give you another trade. Maybe XOM doesn't believe that it's going to make new lows in the next few sessions, so we shall see. So if it does, we'll see what happens here. As of now, a small commitment. OAH is also, not as compelling, hanging in there. These 4-day trades, I remember catching this one, then it becomes a bunch of noise. Here you go again, could be a bunch of noise. So you don't want to be in the noise. You want to be in when it's compelling, when it's stretched, when it's oversold, when you see an outside day, when you see a day 1, so maybe you get a day 2, 3, 4. Day 4-ish, it's not worth your time. That's why Facebook, I'm not long it overnight, even though it could continue higher, had a big move, really big move. And for me, we focused on this last week and turned into a good focus. I think I got involved right when it cleared here, and now it made new highs. And congratulations if you've been in Facebook. This one it was a little choppy in here, but it wound up regrouping right there above the 8 and 21 day. Now it's back at highs. Tried to show you this thing in the morning call this weekend, or actually it's not this weekend, this morning, how overall since July it's just been in a long channel. And if you measure the move of the channel from 72 to 80, at some point this should see 88-ish. Okay, and I think it's pretty, it's not outlandish. Could happen. LinkedIn took the day off after a pretty nice move out of this descending channel. So maybe another day or so, and this loose and wide stock that's tricky at times continues. Held the upper end. I don't even know if that tail is real, but overall in here nicely. At some point, if it's contained, stays above this 231, maybe you get a trade above this prior pivot, which is 238-ish. Twitter had some out of performance today. I think this is a name for next year. I don't want to get too much into it, but starting to act a little bit better. Cleared this, or actually it hasn't cleared that yet, but showing some commitment to this move off the lows. So we'll see what happens into some bigger resistance after. Yelp, everyone was yapping at me to buy some Yelp, and I said, I don't trust this stock, I'll buy some options. And today, thank goodness, when it was up $1, people were like, are you going to add? I'm like, I'm not adding, I'm just sitting. I did like the January 17th, what's it called, 55, so I'll see what happens if there's any type of counter trend move here. At this point, it's still broken, and it trades like, you know what, so I don't think it's worth your time. But if you wanted to play it for a trade with options, thinking that it rallies back, fine. Overall, this is much bigger support, if you go back multiple years, so maybe there's something off of it, but it's definitely broken. What else? What time is it? It's 4:23. Let me go through a few. Gold. Guys were like, Red Dog, you missed a gold breakdown, which I did, but at least I wasn't long it, and I haven't traded it in a while. It hasn't acted well in this little area, and if you were looking for a short, today was your day. It broke below this lower wedge when the market was on its higher wedge, and you had your day down. Just be a little careful. Every time it closes in the low, something happens to the bullish side. Closing the low, something happens to the upside. If this was a stock and not the GLD, I would say yes, this looks like a take-home short for follow-through back to the lows. But since it's the metals, be a little careful because the metals are random, erratic, and everything happens overnight. But overall, I would not look to be long this. There's no reason on this chart to be long it, which lately is a reason why to be long it. That's why, I'm not being in bizarro world trading gold unless there's an intraday setup like we had. If you go back to the chart one more time, this was a nice setup right here. This was the last, I think this was the only clean setup I made some money with gold with. And then actually had a little bit of an update, if you remember. It was inside, held it, had a gap up there, and then got stopped out there. And I think after that, I was like, you know what, I've had enough there. Let it just be tradable without me, and it's been nice. It's been stress-free. And that's really it. We're Monday. We have a holiday shortened week. You're on day 4 of a rally, so you have to be careful with new buys, but you also have to be careful if you're just blindly shorting. Who knows if the strong stocks do come in? Who knows if you can even short those indices that look near highs? If you didn't cover last week, it's up to you to do what you want to do. Most of the people on our VTF has been trying to be long since last Wednesday, Thursday. And then if you're trying to be, tactically short for a Q trade versus 15 to 30-minute highs, make sure you honor those. And so if you're wrong, you don't turn it into a bigger roll-up type trade that you feel sorry about at some point down the road. And oil is still a concern. We'll see if it breaks the threshold, how the market reacts to it. Russia, had a nice move off the capitulation lows from last week, and now we'll see what goes on there. There's, I guess, some headlines around North Korea with their internet going down, how we retaliated. Hopefully we did retaliate, and that's how we retaliated back. It's better than pushing other buttons. So still a lot to navigate and a lot to do, thank goodness, because we all have to make money. Don't look to try and salvage a bad 2014 if you happen to be underperforming from the prior years in this last week. What I think you're better off doing is get yourself in a happy place. Look into what you did wrong this year. Look if you fought trends. Look if you didn't stick with winners long enough. Look at things that you did wrong so you don't do them as wrong in 2015, and then look at things you did right, and then hopefully that'll set the stage for you with a clear head after the holidays versus trying to look for the trades and overly stress yourself out in a time when you should be enjoying with your family and friends. Have a great night. I'll see you tomorrow.